Today I am going to explain to you finding your USP, your unique selling proposition. The availability of information in the web make it easy for the clients to compare, to slice and dice information. So this segment I will focus more on how to make fund performance a key differentiator for us for Coco Life when a client start to ask about performance of funds relative to their investment. So here, as you very well know, VUL companies invest the premium or the investment component of an insurance policy or a life insurance policy of a client either in stocks, bonds, and cash equivalent instruments. So stocks, as you very well know, is a function of what you call ownership or shareholding. Bonds, on the other hand, is what we classify as debt or utang. So just like when a government, like the Philippine government, would like to finance their build projects, they will most likely issue bonds with a redemption coupon of X percent. Either it is given the uh, to the buyer quarterly, semi-annual, or annual. So that is a fixed rate. On the other hand, stocks is something that is moving in prices. It can go up, it can go down. So cash and cash equivalents are so-called short-term instruments. Either they are in the form of treasury bills that will run for 6 months or 1 year, and they have a specific percentage of growth. So here I would like to demonstrate to you how I update the fund performance for Coco Life. So this is as of July 3. So now I will go to the website for Coco Life. It's here. Okay. From that website, you go to the NAB rates. From the NAB rates, now it changes to July 6, 2020. You copy that one. Then you paste it here. Paste special. Put text. And by the way, I have already set up the succeeding spreadsheet. So from July 6, this is now updated. All the numbers are now the same. No? It is now updated 1.5631, the equity 1.5975. So it's automatic here. Okay. Then I look at this one. It is as of today, July 7. I will now do the data. Click refresh all. Then we will wait. It will update. Unknown, or maybe you are partly aware that it's only Coco Life in the market that offers a guaranteed fund. Now, the benefit of a guaranteed fund is that it is a very safe haven in times of uncertainty. Times like this that we face uncertainty due to COVID, we do not know when it will this be over. It is getting the problem is getting bigger and bigger as we move forward. So as you will see, this thing changes here. All the numbers reflect the real-time numbers as of July 7. So how do we read this? So if you look at the equity market, it was launched in December 2006. It is 13 years old. And then right now, the fund value is 1.5975. Last year or December 2019, it was 1.8. So there it was a decline. So here you can see the commentaries of how it performed. Now, how do we do evaluation of performance of funds? So there are two parameters that I put here. The first one is the so-called compounded annual growth rate. That is the calculation that allows us to smooth up the up and down of the figures over an extended period of time. So for a 3-year period, you will see that the best performance for Coco Life belongs to Peso Bond Fund. It now delivered 5.37% annualized growth for the last 3 years. In terms of performance versus inception, it is the Peso Fixed Income Fund that delivered the best since it was launched. Okay, so 13 years. The funds performed annually 4.4% for the last 10, 13 years. So the other one is the Peso Income Growth Fund. It has delivered a performance of more than 2%. So you have to take note that our guaranteed funds I put in here 2%, which is a reflection of the actual percentage that the company guarantees us for 2020. So as you very well know, we have suspended grow, so I will not take or talk about that. So here is the portfolio breakdown. I need to update this one. This is as of February 2020. So given that performance, the question right now is that how do we compare with the others? No? So this is also an illustration of when the funds was launched over a period of time. So if you look at Coco Life, we were quite heavy launching funds during 2006, 2010, and 2014. We do not have any recent launches of funds after 2014. So the office, by the way, provide us with updates, no, in terms of survey of funds of different companies. It is classified as equities, shares, balance funds. This is a combination of equities and bonds in combined into one fund. And then there is purely bond or fixed income. So we have the survey period here as of 2017, 19, and December 2019, January, December, and January 2017. So what's the implication there? So if you look at July, this is now the July 3 valuation. So once you have this figure, how does it compare in terms of fund performance? So I set up another spreadsheet here that allows me to measure performance over different period. So here, this is where I input the latest information as of July 3. Then I compare that with several period. That is for year to date, more than a year, and more than 3 years. So your USP or your unique selling proposition is that we can use our guaranteed fund as a key differentiator when you talk with clients. Clients right now, they are looking for performance of their investment. It is unfortunate that this time of the year, equity market has suffered tremendous losses. Example, as of January 17, 2017, the PSEI or the Philippine Stock Exchange Index is around 7282. Right now, the valuation is 6,311. So it means if you invested your money during that period, you have most likely lost more than 13%. So here I inserted Coco Life guaranteed funds for different fund mix. So over a period of more than 3 years, if the investor have put in 500,000 for several funds, you will see that Coco Life performed or returned a growth of 37,000. That is already positive considering that the equity market is down. Even Coco Life equity funds, you could most likely have lost 23,000 if you have placed your money somewhere in January 2017. AXA lost 74, down the line. And the worst one is Allianz PNB Life. It lost 136,000 if you have invested 500. Now, if you are the investor, you will not be happy seeing that. Now, on the balance funds, again, the Coco Life Guaranteed Fund, outperform the other funds. So we are also leading here in this category in the balance fund. If you insert Coco Life guaranteed funds, Manulife here is 23, AXA is 9,000, Allianz is positive 4, the others are negative. Pioneer Life, they are negative 54,000. On the peso bond fund, here, Sun Life Financials have performed better than the others, but close is Coco Life Peso Bond Fund. Very close, 97,000 pesos. So here, you will notice that there is a shift in the market. It used to be the favorite, this one is the dollar. So I will not to take much of the time there. I will just focus on the peso funds. So if you look at the market, the way it performed, you will see that the thing shifted from heavily invested in equities. It is now moving towards, it favors the bonds. Okay. Example, the peso bond fund of Coco Life. The value right now, if a person have placed their investment somewhere in January 2017, that return will now be almost 20%. If it was placed in January 31, 2013, it could have grown more than 20%. Year to date, it is positive 8%. So when you do uh, explaining to the client as far as fund performance is concerned, while we can highlight our guaranteed funds in a period of 3 years and above, we should also highlight the performance of our peso bond fund. In fact, our fund managers were given rewards in recognition for their excellent fund performance, excellent fund management. So, finding your USP or your unique selling proposition is you are going to highlight. Any companies, they have their own set of SWOT or the strength weakness profile. For Coco Life, we are very proud to have a guaranteed fund that will protect the client in times of uncertainty, a bond fund that outperform its peers,